Good morning and welcome to Dark Gamma Pre-Market Analysis. I'm Samantha. It is Monday, April 13th, and we are opening with a bearish gap this morning. The SP 500 is sitting at 6,776.8, down roughly 40 points from Friday's close of 6,816.89. That sets a cautious tone right out of the gate, and traders will want to pay close attention to where price wants to gravitate as we move through the session.
Thanks, Samantha. That gap of about 40 points is meaningful, and the first question the market has to answer is whether buyers step in to defend it or we see continuation to the downside. Max Pain is sitting at 6,700, which is actually below where we're opening, so there is a gravitational pull lower that the options market is telegraphing. Don't be surprised if we see some pressure building through the morning as gamma exposure dynamics push us toward that level.
Exactly right. Now let's frame the full playing field. The expected move for today gives us a range of 6,765.9 on the low end to 6,867.9 on the high end, roughly 51 points in either direction. We are already trading near the lower bound of that range in pre-market, which tells us the bears are in control early, and a move toward max pain at 6,700 is absolutely on the table.
And if we do break below 6,765.9, that lower expected move boundary, that would be a significant signal that implied volatility was underpricing today's risk. Conversely, any sharp reversal back towards 6,800 or above would start to neutralize the bearish narrative. The key watch level intraday is really that 6,700 zone where max pain lives.
Let's talk sectors, because there is a real divergence worth noting. Energy is the clear standout this morning, leading all sectors with gains of over 2%. That is a flight to hard assets and a classic defensive rotation signal. On the flip side, materials is the weakest sector, off nearly 1%. That divergence alone tells you the market is not in a risk-on mood today.
And nowhere is that risk-off tone clearer than in the Magnificent Seven. Every single name is red in pre-market. Meta and Nvidia are the biggest laggards, each down nearly 1.39%. Amazon is not far behind at 1.26% lower. Even the more defensive names in that group like Microsoft and Apple are off over 0.5%. When the mega-cap growth complex is broadly weak, it puts real weight on the SP 500.
Bottom line for the Dark Gamma community this morning, respect the gap, watch the 6,700 max pain level as a magnet, and keep an eye on energy as the potential safe harbor if rotation continues. The expected move range gives us our guardrails, and with the Magnificent Seven under pressure, the path of least resistance early is lower. Stay disciplined, manage your levels, and we will be watching every tick right alongside you. Let's have a great trading day. On today's macro calendar, the main event is existing home sales at 10:00 a.m., consensus 4,050,000, previous 4,090,000. Additionally, one Fed speaker is scheduled today.
There is one more event during the session. These releases could drive volatility at the S&P 500 open.
Across the board, the Magnificent Seven are all trading in the red pre-market, with losses ranging from roughly 0.5% all the way down to nearly 1.5%, painting a cautious picture for the tech sector heading into the open. The group is moving in lockstep, which suggests this is more of a macro-driven risk-off tone rather than any single stock story.
Microsoft is holding up the best of the bunch, down just over 0.5% at $369.41, while Nvidia and Meta are sharing the bottom spot, each off roughly 1.33%. It's notable that the two highest momentum names in the group are taking the hardest hits, which often signals profit-taking when sentiment softens.
Amazon and Alphabet are also under meaningful pressure, down 1.25% and just over 1% respectively. So the selling is concentrated in the higher beta growth names rather than the more defensive side of the seven. With no major company-specific catalysts in today's news flow, nothing from the Bank of England's operational updates moves the needle here. This looks like broad institutional repositioning.
Apple and Tesla sit in the middle of the pack, each off less than 1%. And that relative resilience in Apple is worth watching as a potential anchor for the group if buyers step in at the open. Overall, the tech sector tone is defensive this morning, and traders will want to see whether these pre-market losses deepen or get faded once the first hour of trading gets underway.
Goldman Sachs dominates the pre-market slate today, carrying a market cap of $269.4 billion and a beta of 1.4169, signaling meaningful sensitivity to broader market swings heading into the print.
That 17.9% expected move is substantial for a financial services giant, and with options pricing in that kind of range, traders are clearly bracing for a volatile reaction either way.
Rounding out the morning session, Fastanal and SPX Technologies are also reporting, with Fastanal's low beta suggesting a steadier industrial read, while SPX's 12% expected move punches well above its small cap weight.
Looking ahead to tomorrow, JP Morgan Chase becomes the center of gravity with its $835.7 billion cap and a 12.5% expected move, flanked by heavyweights Johnson & Johnson and Wells Fargo, making the morning session a full financial and healthcare stress test for the SP 500.
Tankers moving laden out of Hormuz is the headline worth watching this morning, as it signals supply flow is intact and could ease some of the energy risk premium that has been baked into crude prices lately.
Agreed. That should put modest downward pressure on oil at the open, which historically gives a slight tailwind to consumer discretionary and transport names that have been dragged by energy cost concerns.
On the macro side, the Bank of England sharpening its resolution readiness framework suggests regulators are quietly stress testing the system, and that kind of institutional caution tends to keep financials in a defensive posture heading into the session.
With gamma exposure on the SP 500 still elevated near current levels and open interest concentrated around the 5800 strike, any early volatility could get amplified fast, especially with 0 days to expiration contracts drawing speculative flow again today.
Scanning the strikes closest to spot on the SP 500 at 6,776.8, the nearest call with notable open interest is the 6,910 strike, which exploded 428% overnight to 8,036 contracts, signaling aggressive fresh positioning above current price. The 6,925 strike is even more striking, with a 700% surge to 9,102 contracts, reinforcing a dense resistance cluster forming between 6,910 and 6,925.
On the put side, the nearest meaningful open interest anchor is the 6,625 strike, which jumped 719% to 5,659 contracts, making it the freshest downside hedge closest to spot. Below that, 6,525 added over 533% to reach 8,275 contracts, so those two levels define where dealer put exposure is thickest, and likely where buyers step in on weakness.
With max pain sitting at 6,700, spot is already trading nearly 80 points above it, and the put-to-call ratio across all three expirations runs above 1.5, peaking at 2.149 for the April 15th expiry, which tells us hedging demand is heavy and directional bias skews cautious. The gamma exposure dynamic near those call strikes at 6,910 and 6,925 could act as a ceiling if dealers need to sell into rallies to stay delta neutral.
Tactically, watch 6,910 to 6,925 as the key resistance band where the overnight open interest surge creates the most friction for bulls, while 6,625 is the first meaningful support where fresh put open interest could attract price on any intraday pullback. A failure to hold 6,625 opens a path toward the heavier open interest at 6,525, which now carries over 8,000 contracts after yesterday's additions. Gamma exposure. This shapes the entire session. Flip level at 6,598.
Above 6,598 market makers are long gamma. They stabilize price. Below that level, they're short gamma, which amplifies moves.
The call wall at 6,800 is the strongest resistance today. Heavy call open interest forces dealers to sell into any rally there.
The put wall at 6,755 is the key gamma support. Dealers are forced buyers below that level.
With S&P 500 at 6,777, we're above the gamma flip, a stabilizing environment heading into the open.
Tracking institutional footprints. The dominant liquidity level over the past year is the 6,844 level, above current price, with maximum liquidity concentration over 40 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 6,785 level above current price, with maximum liquidity concentration over 2 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 6,777 above the gamma flip at 6,598.
1 sigma range, 68% probability, goes from 6,766 to 6,868. 2 sigma 95% extends from 6,715 to 6,919.
On the GAX side, call wall sits at 6,800 structural resistance. Put wall at 6,755 is where dealers become forced buyers.
The top institutional whale levels nearby are 6,885 and 6,716. These are the highest liquidity concentrations in the market. Expect reactions there.
This is a new section we're introducing today, Daily Institutional Positioning Tracking. Each morning we'll scan the options market for large institutional bets and follow them day by day.
Today there are no new signals to report, but we'll be tracking this daily so you can see how institutional money moves over time.
No institutional contract to highlight today. As we build this daily tracking, you'll start seeing the most interesting positions appear here each morning.
Come back tomorrow. This section grows more valuable as we accumulate days of institutional flow data.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.